Doing? I think we can accommodate more seats here, right? Let me tell them, we can accommodate more seats here. Can we? So that people can, like this, yeah, even if we shift forward. Just, can you call UC? Yeah. So that we can have more people coming. And try and, sorry. So move yours to the end. So come, move it. So that we will have extra seats. No, it's fine, just like this, yeah. Move it. So we know we'll have one seat. Just can you shift to the... Can you shift to the... Yeah? Okay, this should happen. Yeah, here, they can have seats here. I think that's how you people will shift, so that two can enter.
Maybe.
Yeah. Yeah. So two can enter. Yeah, here too. Try and get good entry is the most important of them all. There are people that they know that this trade will buy. Like, if you tell them to swear in their life, they will swear. They know that it will buy. But where they enter is the problem. They will now go and enter the place whereby the market goes in a bit of a loss before going into profit. You enter, the market goes loss, go profit. You know what I did when I was starting off newly in Forex? I told myself, I said, because every time I enter, the market goes in loss before it goes in profits. And I said, okay, because of that I have to, first of all, if I'm looking for a buy, I have to sell first. Once it's not going, I close, I enter again. Have you ever done it? Yes. You've done it? Yes. Hello. So yes, I believe that entry is very important. I believe that entry is very, very important. If you don't get, or if you don't have, please let's lower on the noise. If you don't get or can't figure a good strategy that helps you with entry, every other thing becomes bad. Now market will enter first. That's when you start thinking of take profit to stop loss, all of those ones. He has to enter first now. He has to go in first. So I think entry is very, very important. The second one for me is stop loss. Where you put your stop loss, thank you. Where you put your stop loss is very, very super important, because there are some times that we put a stop loss at a particular point, the market takes us out and start going in the direction we expected. That happens a lot. If that happens to you and you think it's manipulation, can I see your hand? You enter the trade, he stops you and then you start going in the direction. A number of us often come with the idea that it's manipulation. Trust. Even myself, sometimes I go say, wait till they happen. Say I don't make the riff too much, they won't come and fight me. But it's not. So stop loss, your ability to get good stop loss is important. You've gotten your entry, the market is now going in your direction, then you find a good stop loss to do it. The next part is take profits. Where you're going to take your profits, and then the final is the courage to hold to that particular take profits. There are some people that if this is 4 hours time frame, they know that this market is going to buy, and then they buy it here. In their mind, they're already telling themselves that the market is going to take profit all the way there. But once the market reach a close, you reach here, they close. In fact, some people, their take profit is dependent on the profit they want to get. Like so on, I'll just fund $500 in my account now. $500 is chilling. And I enter a trade. The entry is good. Stop loss is perfect. Now where am I going to take profit? I'll tell myself, I will take profit where once I reach $500 profit. Do you understand? So his profit is money, not position. You'll be like, once I reach $700, I'll close. There are some people here, their own is $1. Once you turn $1, close. Once you turn $1, close. Yes, nah, I'm not lying. What? Me, I did it, oh. They there now. If you don't close that $1, you turn to minus 500. You have to, that's one of the best strategies. $1 into 100 is what? $100. Yes, But at the long run, it's not really profitable. So, when you've done your analysis, I keep saying that your take profit should be where your analysis tells you to. So, if you must be a good trader, and the strategy you're using only gives you entry, you're lagging in 75% of the other things. Or the strategy you're using gives you entry, stop loss, you're lagging in like 50%. So any strategy you should use should have the combination of entry, stop loss, take profit, and courage to go to the take profit. Now, courage to go to the take profit is now subdivided into your emotions and the main strategy. Because your strategy might be telling you to go to that take profit, but your heart will be telling you something else. There's this thing they say, a better hand is better than... You're going to see $1,000. Greedy boy, you want to make $100K. You know, go closer. You reverse. So, your ability to hold to that particular take profit entices or includes your emotions and then the other thing. So, what I use, sorry that today is your first time of trading, but this class is just meant to be for me to teach my strategies and all. So, what I use in What I use in trading is a combination of these four things. I have a strategy. I have strategies that help me in getting my entries. I have strategies that help me knowing where to put my stop loss. I have strategies that help me knowing where to put my take profits. And I have strategies that help me holding to that particular take profits. That's why sometimes you see some of the trades I post. There are like the recent one we did the other time about 45,000 in profit. Now that 45,000 was at 1K before. It was at $500 profit before. It was at $5,000. It was at $6,000 profit before we eventually closed to that particular. So because we held it to that particular point, that's why it got there. So if you must be a profitable trader, you need to have a combination of these four things. A strategy that helps you to get good entries, a strategy that helps you to get good stop loss, a strategy that helps you in getting to take profits, and the most important, the courage to hold to that take profits. There's always going to be bad times in the market. So what helps you in overcoming those bad times is you maximizing the good times you have. I often say this, that if a particular setup is meant to give you $10,000 profits, a particular setup is meant to give you $10,000 profit, and you close at $1,000. In your face now, you've made money, but in actual fact, you've lost 9K. Do you understand? A particular trade is meant to give you 10K, and then you close at 1K, you've lost 9K. So your ability to hold to that take profit is super important. It will help you in the long run. You are intending on doing Forex for, you have to always do this. So, in our learning within these 2 days, we're going to try to do the strategies that helps us in entries, And if there's time, stop loss. So whenever I enter into the market, I've started my teaching. Whenever I enter into the market, I look out for 3 things before I do my analysis. Now, for people who don't know what I use price pattern, price action to do whatever thing I do. But the things I use is unique to me because over time that I've traded the market, I've seen that it works in this particular form. And then I formed out strategies from each of them. And that's what I'm going to teach us today. I often say something that whenever you come into a midst of traders or mentorship in sort of like this, there's always going to be people that is going to benefit and there's going to be people that will not benefit, right? So please, you guys listening, be among those that will benefit because this thing really works. I've used it in a number of times. I've used it a number of times and I know it 100% works, 100%. So whenever I enter into the chart, I'm looking out for 3 things. I'm looking out to check if the market is trending, or is the market ranging, or a combination of price patterns. I'm looking out for 2-3 things. Is the market trending? Is the market ranging, or a combination of price patterns? Is the market trending? Is it ranging, or a combination of price patterns? So I'm checking first. Is it trending? Is it ranging? And can I see price patterns? These are the 3 things I'm looking out for once I enter into the market or into the chart. So first off, is it trending? So if we're looking at a trending market, we're looking at trending market in 2 forms, whether it's buying or selling. All those ones are normal basic. So if it's buying, what do we call it if it's buying? We call it bullish. And what if it's selling? Bearish. We call it bearish. So if it's buying, buying means that, might not say higher, high, higher, low now. Some people will not. No, there are some things in Forex they'll just say to confuse you. When I was learning, they won't use that to blow my head. Higher, high, higher, low, lower, high. Voila. Shall know is buying. When it's going up, then when it's coming down, is bearish. So if it's trending, it's ranging. If it's ranging, rather, not trending. So when it's ranging, you're seeing it go up, go down, just almost as if it's on the same line. And then price patterns is having a combination of both. So when it's trending, what I use in denoting my trending is trend lines. What I use in denoting my ranging is horizontal lines. And then what I use in denoting my price pattern is the combination of the 2 of them. Oh, wow. So let's first of all look at when it's trending. So I said when it's trending, I use trend lines. Now, personally on my own end, there are 3 different kinds of trend lines that I use when trying to analyze. And then these trend lines are dependent on what I'm seeing in the market. So when I'm looking for entries, I want to know whether this market has actually started buying, entries in particular or stop loss. I'd always have to refer to single trend lines. I always have to refer to single trend lines. When I'm looking at swing trade, I'm trying to look at the general view, not the general view. Like, I'm trying to, there's a market that is buying on the higher time frame, is still going to sell on the lower time frame, stuff like that. When you're trying to look at it on the whole totality, I'll use the double trend line. That's the equidistant. If you have any questions, always ask you. And when I'm trying to find entries inside those ones, inside the swing, I refer to the triple trend lines. So I use the single when I try to get entries and stuff. And then when I want to refer to market that are in swing trade, I use the double. And then when I want to get entries inside my swing, I use the triple trend line. Earlier on, I've told us there are 4 things that make a trader very, very profitable. And we're going to look at the trending path. So among all these things that make trader profitable, there's a foundation to all of them. Before you even know how to get good stop loss, before you even know how to do your take profit, before you know how to do the other one, you need to understand the function and the work of time frames. Time frames are very, very important. People often misguide it. Time frames are very, very important. If I enter a trade, I have to check, is my time frame agreeing to a certain distance? If the time frame is not agreeing, it's a problem. So time frame is very, very, very important. So we're going to look at time frames first, a topic I call time frame accordance. Time frame accordance. It looks at the function of time frames and how time frames can really work. So in time frame accordance, if we're looking at the normal way the time frames are, if I go to my MetaTrader 5 right now, and I say, I want to see, on your trading view, you're going to see something else different. But using the default MetaTrader 5 settings, this is what you're going to see. An M1, an M5, an M15, an M30, H1, H4, D1, weekly, and MN. So I divided these time frames into three. These default ones. I divided it into three. Wow, there should be a way to... Okay. Wow. Crazy. What's up, use this? So we're going to look at those we're going to first of all look at classifications of time frames into three using the default settings of the MetaTrader 5. So it helps me in classifying time frames into three. First off, let's list all of those time frames we have already. We have the M1, we have the M5, we have the M15, we have the M30, the H1, the H4, the D1, and the weekly time frame, and then the monthly. So in that classification, the M1, the M5, the M15, I'm going to class lower time frames. H1 all the way to the MN, I'm going to classify them as intermediate time frame. So this is the default that we're going to use. The M1, the M5, the M15 as lower time frame, the M30 as intermediate, the H1, the H4, the D1, the weekly as higher time frame. Now, each of these classifications, they have its own uses. That's why you need to really understand the classifications itself. So for that of the lower time frame, M1, M5, M15, the lower time frame is used in getting entries and confirmations. It's used in getting entries and confirmation. I'm going to explain it further. It's used in getting entries and confirmation. Is it not better someone to trade, use that phone instead of you, so that you are, yeah.
But like it's fine, I'm still getting.
Newell can do it, and I want more 0.5. Yes, that works. So the higher time frame H1, H4, D1 weekly, and then the MN. Now these are higher time frame. They are used in getting the general view of the market. I'll still explain all of this. General view. And then the M30 as the intermediate time frame is the bridge between this and this. And then when we are looking at time frame accordance, it's often negligible. But let's just say that this is for this like a bridge connecting this and this one. So our ability to understand that there's an M1 and M5 and M15 for lower time frame, and then there's an M30 for intermediate time frame. There's a H1, H4, D1, WK, MN for higher time frame that helps us in seeing the general view of the market. We good? Do you understand this part? Do you understand this part? Good. So what do we mean by general view of the market? So the higher time frame helps you. That's the normal distance. In fact, there's a thing we do that before we try to trade, let's assume that I want to trade this 31s. The normal thing I often do is you have to start from the higher time frame. We'll see come back to time frame accordance. But whenever you want to trade, you have to start from the higher time frame to look at the general view of the market. Now, you're not just starting from any higher time frame. You're going to start from the first one that gives you that general view. So you're not just starting from any. Remember higher time frame, we have H1 in higher time frame, we have H4 in higher time frame, we have D1 there. But you're going to start from the first one that gives you the general view. Now this is what I mean. So I'm currently in my H1. Now H1 is higher time frame. But this particular H1 is not giving me the general view. Why? Because if I scroll all the way down, I can still see markets that happened in the past. Do you get? I can still see, so it's not, by general view, I mean you can see the totality of the market without even moving an inch. Just seeing everything like that. If I go to my H4, scroll all the way down, I'm still seeing markets that happened in the past. So this is not giving me that general view. It's still part of higher time frame. Oh. If you go to the D1, can you see that you're seeing every part of the... Okay, wait. It's not even loaded. Yes, you're seeing every part of the chart on this D1. I don't need to say, I have to scroll the way down. No. Just seeing everything already here. So if you want to even start analyzing, you have to refer to this one. We'll still come to all of that. But now let's go back to the time frames. So for the time frames, after you've known that there's a classification M1, M5, M15, and you know that the lower time frames are for entries and confirmations, the higher time frames are for general view, and then the intermediate, that's the one, the bridge between the two of them is what? Negligible. We good? Yes. Now, there's something we call an accordance that brings all these time frames together. Meaning that before I take any trade, I have to refer to that accordance first. If you don't, it becomes a problem in your trading. These are some of the missing pieces that are in some people's Forex stuff. So what does the accordance tell us? The first part of the accordance tells us that before I take any trade, that I have to make sure that all of my lower time frames agree together. That before I take any trade, that I have to make sure that all of my lower time frames agree together. And what do we mean by that? Now, I want to enter a trade. I have to first, all of the lower agree together. Mean that if, now I know that I have 3 time frames in the lower, M1, M5, and what? And what? What's happening? M1, M5, and what? We are traders. You know there's no introverts in Forex trading, right? You know that? Introvert not there Forex, so if you're an introvert, you blow your account. Good. So M1, M5, and M15. So the first thing to the accordance is that before I take a trade, all of my lower should agree. Meaning that if I'm seeing a buy in my M1, I should as well see a buy in my M5 and a buy in my M15. Now, if it's in a case whereby you don't obey to this rule, let's assume that there's a buy in M1, a buy in M5, and then an M15 a sell. Now, normally some people might not really look at all of it. You might go for your buy, you might just enter the buy. But you know what happens? The market would first of all try to correct this sell to a buy. And by trying to do that correction, you go and blow your account. So when it now corrects it, it starts moving in your direction. That's what makes it sometimes you've entered the trade, it goes against you, and then it's going in your favor. Because you didn't heed to the first rule of the time frame accordance. That before you take any trade, all of your lower time frame must agree together before you enter. So you have to be seeing the same thing you're seeing in M1, in M5, and in M15. If it's a sell, I'm seeing a sell in M15. I have to see that same sell in M5. I have to see that same sell in M1 before we enter the trade. Do you understand? So all of the lower time frame must agree together. That's the first rule of the accordance. All of the lower time frame must agree together. Now the second rule of the accordance says that that's one. The lower time frame needs to agree to at least one. Lower time frame needs to agree to at least one. To at least one of the higher time frame. The second rule is that the lower time frame needs to agree to at least one of the higher time frame. So I already know that I have to have the same thing in my lower time frame. If I'm going to see a sell in M1, I should see the same in M5. I should see the same in M15. But now it needs to agree to at least one of my higher, meaning that if M1 here is going for a buy, M5 here is going for a buy, M15 here is going for a buy. Now it meets one of the criteria, it meets this one. But before I enter the trade, I have to see the same buy in at least one of the higher. Not in all of the higher. Do you get? Don't get the English. At least one of the higher. So, in the higher we have H1, we have H4, we have D1, MN, and the rest. So if all of this is sell, 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 and I'm seeing a buy here, the market is valid. We can now enter for the buy. But if all of this were sells, crazy. Crazy, 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 crazy. I'll come back once there's lights. Yeah? Yes, I have the hard drive on me. Crazy, Jesus Christ. Sorry. Fucking hell. I think this mic is connected.
It's just time.
What? He what?
Like 5 years ago, but let's just say I didn't continue.
Like markets are happening in the past. So this is not giving me that. What's happen? Don't beat me. No, no, I'm good. I upped it before. That's why I told you I upped it. It's good now. I know. Yes, you're seeing every part of the chart on this table. Are we good? H1, H4, D1, and the rest is for higher time frame using seeing the general view of the market. Then we mentioned that before we make or trade any trade, before we try to do anything on the market, we have to first of all check the accordance to which all of these time frames goes. That's the synergy between the time frames. First, we mentioned that before we take a trade, that we must make sure that all of our lower time frames are agreeing together. Before you're buying, before you're selling, all of the lower time frame needs to tell you the same exact thing before you enter. And then that you need to confirm that you're seeing that same thing in at least one of the higher time frame. So another part is, that's the third part of it, is that the M30 is negligible. By negligible, that means we don't use it now in the time frame accordance thing. So if I have an M1 here that is asking me to buy, and then I have an M5 that is also asking me to buy, an M15 that is asking me to buy, an M30 that says sell, a H1 that says buy, H4 that says buy. I don't go write something. Sorry. Oh, no, not this one. Sell, and then a D1 that says sell, M15 that says sell. So let's be sure that the people outside are also benefiting. I'm going to go to them. My things are safe here. Then Ajana. How we doing?
Stuffy here.
We are managing. Sorry, Is what. So if you're having something like this, we're having a buy in M5, M1, M5, M15, M30, H1. So based on what we've learned so far, can they reduce the volume of this for now? Who has the remote? Uche, can you reduce the volume? Can you reduce the volume of this for now? Who has the remote? Uche, can you reduce the volume of this for now? Good. So if you're having something like this, based on what we've learned so far, would you be entering for a buy on the market or a sell? A buy on it. So the M1 is for, did you understand what I've been teaching so far on the accordance thing? Yes. So now we're having an M1 that is telling us to buy, an M5 that's telling us to buy, M15 that's telling us to sell. Then M30 that's telling us to sell. Remember, first off, we said that there are how many classifications of time frame? We have the lower. So based on all the things, the accordance, what are we going to do here? Buy or sell? This is at 24. It's going to be at 16. What? I'm hearing a combination. Buy or sell. What's happening? We wait for what? The lower time frame to. You guys are following now. Don't worry. This was at 24. I'm sure they will reduce it now. So now we have something like this. What are we going to do? Buy or sell? Buy, right? Are you going to buy or are you going to sell?
None of the above. None of the above.
We're going to buy. Please, can you pick this call? Somebody wants to do something. Just tell me. Can you pick the call? No, yeah, to do it downstairs. So what are we going to do? Buy or sell? No. If you say sell, let's say just sell. Only you say sell. So if you are correct, only you is correct. Yeah? Why did I reduce our half? If you are saying buy, let's see your hands. So what's the majority saying? No. No trade. Why? Because of the accordance. So what part of the accordance is missing here? M15. So the M15 is saying, so it doesn't agree with the higher time frame. Okay, so let me clean that. So what about now? All the lower time frames agree together right now, correct? Yes. So are we buying or selling? No. Eh? No. Why?
All of them are saying sell. All the higher time frames are all saying sell.
All the higher time frames are all saying same. Is that the reason? Yes. Because all of the higher time frames are saying the same thing? Yes. Eh? Wait, because let's understand. Because all of the lower time frame are saying the same thing.
No, because there's no accordance between the higher time frame and the lower time frame.
So there's no accordance between the higher and the lower.
Yes. At least one in the higher. At least one in the higher.
What about M30?
No, it's intermediate. It's negligible.
Okay. So do you understand it? Yes. Do you understand it? Yes. Can we put it into the chart? Can we try it on the chart? Yes. So let's try and see if we can do it ourselves on the chart. So assuming that we want to look at this market the way it is on the chart, imagine that we want to look at this market the way it is on the chart. Now, throw away your support and resistance, throw away your trend lines, throw away your... let's look at the markets just the way it is on the chart. And I go to my weekly. Okay, let's start from the daily. Just we're looking at the market the way it is on the charts. Again, throw away all of those informations you've known. So don't come and tell me you have seen a break and a retest. There's no trend line here. There's no support. I've not drawn anything. Just the way it's on the charts. So if we're looking at the way this market is on the chart, we want to see the view of this market. Would you say that this market is selling or buying? Selling. Do we agree? Yes. Why? From here to this is the highest point, and this is the lowest part of the market, correct? So it's what? Is what? In your book, write that you're seeing D1 sell. Just write it. You could just turn to the back or something, just so that we are following, so that we're together. Just at the back, like D1 sell. And then what about H4? Do we think the H4 is buying or selling? Just at the general trend of the market? Eh? Everyone is agreeing. So from here all the way to where the market is. So H4 buy. You can write it as well. What about in H1? H1 was in a sell? Good. Fine. Oh. What about M30? We agree. Right? Eh? What about M15? Eh? We are seeing it. It's not just me that is seeing it. What about M5? And then what about M1? Good. Now I'm going to ask people on this row, this second row. Anybody? Wait, now I've not said anything. only people on the second row. If you have to take the trade based on what you've written, would you be buying or would you be selling? Just the people on the second row. Yes? You not place. You not do anything. Do we agree with them? Yes. Do we agree with them? So let's try this last one. But I don't want you to tell me. Just write it. So don't tell me. Just write it on your own. I'm going to look for another index. So don't tell me. What are you seeing? That's right. Don't tell me. Yes, sir. We good? We good with M1? M5, don't tell me, you just write it. We good? M15. Just right, oh, just right. We good? 30. H1. Those joining us online can also be doing the same. The best part of Forex, the best way to learn is by practicing. So if you're not doing it, H4. My face is very dark. The exposure is bad on the YouTube. Yes, I can't see my face. D1. Pap.
Viewing the charts. As you are seeing it like this now, it's looking like this here, right? But when you close the charts, close it very well now, you reduce it, you see the general view of the charts. I don't know, maybe if you can see a clear view of it. From my phone, what I'm seeing is itself.
Yes, so we're just trying to see the market just the way it's on the screen so that we can understand the time performance. So D1. I don't ask you now. That's right. Weekly. Weekly no follow. You follow? No, let's stop at D1. So I want to believe that we fully understand it, right? So let's say everyone on this row, I want you to echo the same thing. Wait. Can we echo the same thing? Everyone. Yeah. On what we're going to do? Yes. Can we? Yes. So everyone there, what are we going to do?
You're selling.
Sell. Everyone here saying sell.
Total sell.
There's someone at the back that wanted to say buy. Yes, sell. So what about people here? I'm still hearing small buy inside. You're saying buy, right? My brother, you're saying buy now. No, don't worry. My favorite people. What are we going to do? Buy or sell? Everyone is saying sell. Nobody is saying buy. Come on now. Everyone? Wow. So what if all of us failed it? No. It's possible now. So if it's a buy, this is our brother that said buy. All of us will contribute money and give him back. Where is he? If it's a buy, everyone here will give sell for this. I agree with you, it's a sell. M5. M5 sell. M50. This one is easy now, that's why now.
Buy.
And then the last one. Oh, this is the last. So one made it to sell. All of the lower time frame was giving sell. And then he's agreeing to that is asking you to sell. Do we understand? Let's try just one last time. Just one last time. So we're using the same process. Just one last time. Don't tell me. Just write it. So one last time, from the M1, what are you seeing? Just write. Just write. M5, what are you seeing? Just write. M15. M30, H1, H4, V1, so what are we going with? Nothing. So what are we going with? So everyone here is saying a sell, right? So based on what you've done, let's hear from this side first. Based on what you've done.
We buy.
We're buying?
Yes, sir.
And then people here. So in your D1, you're seeing what? D1, you're seeing what? H1, you're seeing what? H4, this one, you're seeing what? This one? So I want to believe that we understand it. So whenever you want to take a trade, always make sure that all of your lower time frame are agreeing together. Not just that all of them are agreeing together, but they are agreeing to the particular this thing that is happening. This is too much. Yes, so my brother, have fun now. Ask. Who is asking? So we're just looking at the general trend. We're not even putting trend lines in. It's just what we are seeing on the charts. So just a quick one. So if I want to analyze this jump 10 index, I told us that we often start from the higher time frame, right? So H1 is higher time frame. Can I start the analysis from here? Can I start it from here? Yes. Someone said 4 hours. Can I start it from here, H4? What? D1? Yes. Someone said H4, D1. So which one? D1? We're starting the analysis from D1. So I can't even say that I want to start it from the weekly.
You can.
I can.
Yes, D1 is better.
D1 is better. So tomorrow's class we're going to delve more into this, but let me just put in an introductory into it. If you want to analyze, the first thing you do is to start from the higher time frame. But then I told us earlier on that you're not just starting from any higher time frame, it's not just any. You're starting from the particular higher time frame that has the first one. The first higher time frame that has the general view. So we have the H1. It has the general view. It's higher time frame. But if I scroll all the way down, I can still see markets that happened in the past. It's loading. Let's restart it one is. So this is H1. I can't start my analysis from here because if I start all the way down, I can still see markets that happened in the past. That means I'm not seeing the totality of the markets here. If I go to H4, I cannot start here because if I scroll, I can still see the whole thing. Whatever time frame you're going to start your analysis from, part of what we'll learn tomorrow is, it has to show you the whole thing on the charts. You are seeing every part of it on the chart. That's the first one you have to start from. The D1. Now, on the D1, I don't need to scroll. I don't need to say, what's happening? I'm seeing every part of this market on this chart. Do you understand? So if I'm going to start my analysis, I have to start the analysis from what? The D1. Do we understand? Why? Because it is the first that shows me the general trend of the markets.